Let's bring in Oliver Chen, Senior Retail Analyst at Cowen. And Oliver, you see it play out within your universe in many different ways. So do you see people reaching for the Le Creuset, or are they going for the short party dresses?
Well, both are really happening. Nesting is a trend that's here to stay, and party dresses are happening too. People are definitely going back to stores, so we're seeing encouraging data points with store traffic, and in many cases, there's not enough supply. So Delta has not impacted demand as we see it, but it has impacted supply chains, and that's something we're watching. We do like the broadline retailers, Walmart, Target being multi-category is a big positive. Also, Target has a great home collection as well as apparel. So that's a key factor for back to school as well.
Hey, Oliver, it's Tim. And you brought up the two places, or the two names that have been so divergent, Walmart versus Target. How do you explain that? Because as you pointed out, the categories that they operate in, the growth of their digital business in e-commerce, same day sales, pickup, the dynamics that have really extended at Target seemingly are there at Walmart. How do you rectify that?
Yeah, both of these players have really exceptional curbside pickup models. So Drive Up has been benefiting Target, and curbside pickup Walmart. Walmart has 50% grocery exposure, Target's about 20%. And we actually like both of them. Target's at a 19 times PE, Walmart at 22. So from that angle, Target is a more reasonable valuation, good entry point. The back to school play, apparel, that's a key positive for Target. As you think about Walmart, it's a global play as well. And some of the global businesses do weigh on earnings relative to Target. So the growth profile, the EPS is a little stronger at Target. But what's happening really is the consumer likes these multiple categories, the convenience, the everyday low pricing models. And really retail's transforming. Both of these are becoming e-commerce plays, marketplace plays, rethinking healthcare, financial services. So we like them both. For back to school, we also believe in beauty and denim. So Ulta and American Eagle are ideas there too. And this will be one of the best back to schools we'll ever see.
Oliver, I have a question for you. It kind of relates to the ISM data that came out. One of the respondents was talking about supply shortages, price increases, labor shortages. It's just hampering manufacturing activity. It's impacting broader economic growth. So they're saying part shortages are their largest business constraints, so they're not going to fulfill those orders that customers want in the fourth quarter. So when you look at whether it's electrical equipment, appliances, components, are there places you would be short? I'm talking about denim being long. Or should we be worried, or should we say that, okay, people are going to look past some of these supply shortages when you think of overall? You're talking about home supplies and other things. You know, are there winners and losers here that we should be looking at?
Yeah, I think you're 100% right. Home and the lead times in home product is a big risk factor. Also apparel and women's apparel. There's been problems in ports as well as factory shutdowns in Southeast Asia as well as India. Furthermore, transportation costs. If you air freight something, it's about 4 times as expensive, and non-air freight is running 30 to 50 times % higher. So those are all risk factors, and it's really retailer specific. What a lot of retailers have done is they're getting price increases of 10 to 20% or more, and B, retailers have tried to get deliveries earlier. That's why we like Walmart and Target, because they have a lot of scale. But it's going to be a problem for holiday as well as springtime. And there's also increased costs for transportation and freight. So all these factors are definitely things to monitor. But this is the demand profile is very strong.
Who is able to get a 10 to 20% increase on goods? Like what am I paying 10 to 20% more for?
In certain categories like handbags, capri and tapestry. And it's really like a mix shift versus like for like. So consumers that are going to stores are being really purposeful and responding to higher price goods. We're also bullish on luxury goods because the luxury customer is working in there too and going digital.
Right. Oliver, good to see you. Thank you.